Hi everybody, welcome to this tutorial from Alpari. My name is John Jagerson, and today we're going to be answering the question, what is the Forex? We're going to do this by looking at a real-life case study that represents essentially what Forex traders are doing every time they buy or sell an exchange rate or a currency pair. In order to look at what a currency trader really is doing, it's useful to look at a scenario that might actually occur in your real life. So here's an example. Let's say that you live in the U.S. Now you typically will use the U.S. dollar as your currency of choice. However, you're going to go and visit another country. So you're going to take a summer vacation in Switzerland. So you're going to become very interested in the Swiss franc. That's the symbol for the Swiss franc. Now, you're taking over with you about $500 worth of spending money. So this is $500 in US dollars. And you're going to, once you get there, you're going to convert that into Swiss francs. So at what rate do you convert that over? It doesn't just convert 500 for 500 unless the exchange rate itself was 1 or equal. The exchange rate right now, for example, on the dollar to the franc is 1.20 francs per dollar. Now it goes a little bit further than that actually, because in the currency market we take things out at least 4 decimal places and in some cases 5 decimal places. But we're going to stick with just 4 decimal places for now. So the exchange rate right now means that it's going to cost 1.2049 francs per dollar. Or, in other words, $1 buys 1.2049 francs. So if we're going to convert our dollars into francs at that exchange rate, that means essentially we're going to be paid 602 francs. So we're going to go through our vacation with 602 francs in our wallet and to use for some spending money. Now what happens, however, at the end of the month, or the end of this vacation, when we've decided that we are going home, we want to convert over our francs, which we ultimately never wound up spending. We were able to use credit cards the whole trip or whatever, and that cash is still in our wallet. We still have 602 francs in your wallet, and you want to convert that over into dollars. Well, this exchange rate that we were dealing with has probably changed. Exchange rates change every day, and over a period of a month or 2 months or 3 months, they may change quite a bit. Well, let's pretend that in this case, the exchange rate did in fact change, and it actually dropped to 1.1049. Well, if we assume that our exchange rate has changed to 1.1049, then our conversion back into dollars is going to be a little bit different. But what's happened here? Well, essentially what's occurred is that the franc has gotten stronger to the dollar compared to the dollar. It takes fewer francs right now to buy a dollar, or in other words, it takes more dollars to buy the same number of francs we used to be able to buy at the beginning of the summer or the beginning of our vacation. So if we were to convert this over this time around and convert our 602 francs back into dollars, we're going to walk away at the end of the summer with $547. Now, what just happened here? Essentially, we held francs. We owned francs during our vacation. Well, that's largely what a currency trader is doing. If they think that the value of the franc is going to increase relative to the dollar, and we're going to talk about in these tutorials, we're going to talk about why an exchange trader or a Forex trader might think that, then we're going to be able to convert at the end of the summer in a more valuable asset into one that's comparatively less valuable. Well, we live in the United States, so this isn't such a bad deal. We've actually made $47 in profits that we can take home and then spend. Well, this is essentially what a Forex trader is doing, just on a larger scale and more frequently and typically more profitably. Well, we've run through our case study, and I think we've got a basic handle on how a foreign exchange transaction works. It looks and works pretty much like it does in real life, except we're doing it all through a trading application online, typically with larger amounts of money and, of course, much faster. But there are a couple of things that you need to make sure that you understand. The first of which is what is FX or foreign exchange or Forex? It all refers to trading one currency relative to another. And in the case study, we looked at the dollar versus the franc. Number two is you need to understand what a pip is. So in the foreign exchange, we always talk about, well, are you up or down pips, and how much is a pip worth? What are fractional pips, etc. This is a pip. When an exchange rate changes just by one point over here in the fourth decimal place, that's a pip. That's how much that changed. So if this went from 1.1049 to 1.1050, it has improved by 1 pip. So that's one of the things we have to keep in mind. If we can remember these two things, you've got basically 80% of what you need to understand to be able to put in a couple of trades, a couple of paper trades, and really see how all of this moves. In the later tutorials, we're going to go into detail on how do Forex traders use charts. What about fundamental analysis? What moves currency exchange rates? What currency exchange rates are there? There's majors and crosses. How do they work, and what are their differences? So we're going to go into a lot of detail as to how does the foreign exchange work. But if you can keep this example in mind, it'll make a lot more sense as we go through the other tutorials.